Okay, it's the Wall Street crossover show with Darren Sinden, market commentator at Admiral Markets, the usual or the permanent pundit on this part of the program or this part of the day. What are we looking at today?
Well, it's obviously the FOMC day, Zach. You know, the Federal Reserve's going to make its latest pronouncement on interest rates, and so that's the major data point. Notwithstanding anything we might hear about Greece, there's a fair bit of interesting European data as well to look at. So if we
okay, let's get into it.
Yeah. So the data released over the European session. First of all, for watchers of the UK, our own Monetary Policy Committee minutes for June were released this morning around 8:30. They showed that the committee voted 9-0 for no change to interest rates and QE in June. As with the last 2 months, though, two members of the committee said that they were finally balanced on their decision, and hard on the heels of the MPC minutes was some data from the Office of National Statistics, and their UK average weekly earnings number. It's quite odd because they measure this over a sort of a 2-month period. But anyway, February to April, year on year, is the measure that we're looking at here. The figure came in at 2.7% gain. I think that was well ahead of the forecast of around plus 2.1. It's the fastest rate of growth in wages in the UK since February 2009.
So things finally changing.
Well, yeah. I mean, this is one data point. So I think we probably need to see a couple more positive reads on wage growth. But it would suggest, wouldn't it, that if we're going to see continuance of wage growth like that, inflation could come back, and we could be looking at a rate rise in the early part of 2016. And that's the view the markets took. Cable spiked quite sharply on that data.
So in other words, the earnings are actually a better indication of interest rates than inflation.
I think that's probably true for now, because of the dynamics of the way that UK inflation numbers are calculated and the market forces that are driving prices down. Yeah, wages probably are a better guide for now. And then in terms of Europe, more traditional measure of inflation there was CPI for May. Year on year, the figure there, and as second read, this is, by the way, for that number, just to sort of confirm it, but 0.3% was the gain. The forecast was 0.3%, and the prior read was plus 0.3%. So a small sign of inflation in the Eurozone, but it's flatlining really across the last couple of months. And so if we move on to European movers, what's been moving in equity markets today that's caught our eye. The first stock is FTSE 250 name Barclay Group. BKGLN is the ticker there, if anyone's unfamiliar with that. They're up 8.39% this morning, announcing profits that were 44.5% better. And the stock has lifted the whole UK house building sector this morning, but as I say, Barclays the standout leader, up best part of 8%.
Just like rampant, I mean, no pause in the progress at all, just completely one way, even though we're like years into the bull market on real estate. Yeah,
well, yeah, that's very true. In fact, there was a piece in the Standard just yesterday by Tony Pidgley, the boss of Barclays, explaining why he's investing up to £200 million in a development in West London. He still thinks there's upside to the market, and he's been a of these things over the last couple of decades. Going the other way, Tesco, TSCO, the ticker in London, it's the UK's largest supermarket, down on the day by about 1.4% after Credit Suisse issues a negative note on the supermarkets. Interesting note, they're bearish pretty much on the traditional supermarkets. They have quite like Ocado in the sort of...
Yeah, that has been immune space from the... from the woes across the sector, which is rather ironic given that they have difficulty turning in a profit.
Yes, it's just perhaps shows how the world's changed in those sort of 5 to 10 years that they've been going. And then we move on to a European name that's caught our eye this morning, Telecom Italia, TIT in Milan, up 3.5%. Talk here that Vivendi, a big French media group, which themselves are up 1.3%, are likely to increase their stake in Telecom Italia from 15%, or to 15%, I should say, from around 8.3%. The 8.3% actually it's inheriting from an acquisition it's making in Brazil, but the boss Vincent Bellor said he'd quite like like to round up his holding to 15%. So it'll be interesting to see if that happens, and the Italian market like the same.
Heating up the media sector or the telecom sector as well.
Yeah, absolutely.
Sort of pointing us to Vodafone, and well, I suppose they're all integrating now, aren't they?
It's that
TMT. It's the TMT thing, isn't it?
It's that challenge of connectivity and content, trying to find that right balance. But an interesting one to keep an eye on from here on in. So if we move on to our next slide. So M&A rumours and movers, and we're going to look here at the sort of the partial conclusion of a story that we covered literally a week ago. Coty, which is COTY in the US, are up 19% yesterday. They basically said to have won the auction for the P&G, Procter & Gamble's was beauty business. The deal's seen as being transformative for Coty. We flagged this, as I say, a week ago, saying that the fragrance brands at P&G were in the sights of Coty, and the deal should fetch around $5 billion. It's quite an interesting deal, this, because the talk is that rather than a traditional takeover, P&G will spin off the beauty assets into a new vehicle, and Coty will effectively reverse into that. The final terms of the deal may not be known for a week or two, but certainly an interesting play. The market obviously likes what it hears. And in terms of US peers, both Estee Lauder, that's ELUS, and Elizabeth Arden, RDENUS, were up in the US market yesterday, 1.2% and 1.5% respectively. But there was no positive read-through to European peers L'Oreal or Givaudan, which are both trading lower in the European session. So I don't suppose it's the last of the consolidation within that sector. I think, as with all these sectors in the States at the minute, they're seeing M&A where one leads, another is likely to follow. But it'll be interesting to see if the sort of fever catches on in Europe as well.
Okay, and the data points? Well,
it's all about one thing and one thing alone really this evening. The FOMC rate decision comes out at 7 p.m. London time, that's 2 p.m. New York time. No change expected, but obviously any statement will be dissected as to clues to when the rate might be. It's also a quarterly meeting, and so we get also the Fed's quarterly economic forecast. And just in case anyone's not aware, this is the composite of surveys and data that have been gathered by the regional Feds in the previous 3 months, and it will suggest forecasts for GDP, inflation, unemployment, and several other indicators too. So well worth looking at that. And then that comes out at 7 p.m. with the decision, and then half an hour later at 7:30 we've got the press conference. And Janet Yellen will be speaking, facing the world's media, and of course the market will be poring over every nuance that she puts into her statement and Q&A that she gives.
Right, and do you think it will be a bit more jittery in the market ahead of that?
Well, I think people just wind down ahead of the statement. To be honest, I don't think anybody, as I say, expects a change. But what they probably may fear is that or look for perhaps lower for longer. So my views are December or 2016 at the earliest. The bulk of the market fancies September, but we shall see.
Okay. And
in terms of pre-market movers and levels, I picked out Anthera Pharma, which is ANTHUS, up 2.36% pre-market, but that's on top of an 8% gain in yesterday's regular session. And the reason for that is simply that it reached a milestone in its phase 3 trial with the FDA for its anti-lupus drug, and the market likes what it hears. And going the other way, perhaps flying too close to the sun historically, David's Tea Inc., that's DTEA in the US, down 12.2% pre-market. And simply, the reason for this is a recent IPO, and it failed to impress with its maiden numbers. It priced 27% above the expected range of its IPO, and then it made a 42% gain on its debut, so it's flown very high, very fast. Something of reality setting back in, as I say, 12% down pre-market, and it'll be interesting to see how that one trades through the regular session. And then in terms of levels today, equity markets seem to have gained a bit of composure again in Europe, so slightly tighter ranges here. 66.50 plays 67.10 in the FTSE. With the DAX, we've gone for 10,960 on the downside, 11,075 on the upside.
Well, it's just around there now. It's just falling through that. So bit of jitters coming back in there.
Okay, and then on the S&P, 2082 plays 2098, tightening the range slightly there. And similarly in the Dow, we're looking now at 17,770 plays 17,920. And on the currency front, euro dollar 112.40, I think it's worth watching to the downside, but of course the euro's remained remarkably firm despite the Greek issues. At 112.95 is the upside level to watch there. The range is tightened also in Aussie euro today. 76.68 to the downside, plays 77.02 to the upside. Dollar yen, the yen weakening slightly, again nothing too dramatic, but we're 123.70 now on the downside, plays 124.15 on the upside. It'll be interesting to see if it can sustain a move above 124. And on cable, as I said,
quite a jump this morning.
Yeah, 156.40 now on the downside, plays 157.70 on the upside, and you fancy that the upside's the area to be watching.
Okay, well, we'll see how that pans out for the rest of the session. Obviously, there'll be a bit of a wobble in both directions, so volatility this evening after the London close. But anyway, Darren Sinden, market commentator at Admiral Markets, thanks for your insight today, and we'll be back tomorrow.